gentlemen, welcome to the IRB Infrastructure Developers Conference Call for discussing the financial results for the quarter ended September 30, 2023, along with recent developments. We have with us on the call today Mr. Virendra Maheskar, Mr. Dhananjay Joshi, Mr. Sudhir Hoshing, Mr. Anil Yadav, Mr. Mehul Patel, Mr. Tushar Kavedia, Mr. R.S. Sharma, and Mr. Amitabh Murarka. As a reminder, all participant lines will be in the listen-only mode, and after the opening remarks by the management, there will be a question and answer session. Please note that the duration of the call would be 45 minutes, and any queries left unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. I now request Mr. Yadav to give you an overview of the significant developments during the quarter. Thank you, and over to you, sir.
Good evening, everyone. I welcome all the investor and analysts to our earnings call for Q2 FY23. Hope you all have been able to go through our detailed number as well as presentation which were released yesterday. I will briefly cover the key highlights for the quarter, maiden distribution from the private InvIT, which will reflect in the cash flow in Q3, and new project wins. We are pleased to inform that IRB Golconda Expressway Private Limited, the SPV incorporated to implement the prestigious Hyderabad Outer Ring Road project, has been received appointed date from the HMDA and commenced the toll collection on the project from August 12, 2023. The SPV has paid upfront concession fee of rupees 7,380 crores to the Hyderabad Authority. For equity for HOR, the trust has raised 2,862 crore rupees through a right issue from IRB and GIC affiliate to fund the equity for Hyderabad ORR project in a ratio of 51:49. The Samakhali Tollway Private Limited has achieved the financial closure comprising of upgradation to 6-lane with the paved shoulder of NH27 from Samakhali to Sultanpur section in Gujarat. The consortium of lender has extended a debt support of rupees 1,446 crores for the project. On achievement of this financial closure, all the projects are financially closed. We expect to receive the appointed date for the project very soon. IRB Infrastructure Trust has received a sanction of 6,390 crores towards refinancing the pie of the its project SPV. And out of that, the trust has already drawn 2,417 crores to refinance the SPV level debt of two of its SPV, that is Cathal Tollway and West Coast. Upstreaming of the project level debt to the InvIT will significantly improve the cash flow for the unit holder, given the back-ended amortization, optimization of the tax treatment, and the lower interest rate due to pooling of the cash flow from the completed projects at trust level. The silent features for the refinancing, the interest rate has reduced from 9.7 to 8.55%. That is a saving of 115 basis points. And saving in the amortization during next 5 years. The earlier amortization was 23.6%. Revised amortization is 8.5%. And almost 15% saving in the amortization of debt of roughly 6,400 crores. So that translates roughly 1,000 crores for the next 5 years. On toll collection front, Mumbai, Pune and Ahmedabad, Vadodara per day toll collection has improved from 6.25 crores for the quarter ended September 30th, 2023, as compared to 5.3 crores per day for the quarter ended September 22, and a growth of 20%. For private InvIT, the per day toll collection has improved to 6.83 crores for the quarter ended September 30th, 2023, as compared to 5.43 crores per day for quarter ended September 22, a growth of 25%. Increase in toll collection is on account of tariff revision, increase in traffic, and addition of the IRB Golconda Expressway Private Limited. The order book for the company stands to 32,700 crores. Within this, EPC order book is roughly 7,500 crores, providing good revenue visibility for next 2.5 years for the construction segment, and further bolstered by the 3 years executable O&M order book close to 2,500 to 3,000 crores. This order book does not include order of TOT-12, which is expected to add roughly 600 crores on EPC side and around 3,300 crores on O&M side. EPC order book of TOT-12 would include the initial capex that will get executed in year 1. Now, with respect to the upcoming opportunity, we believe that the mode of award will change significantly and BOT pie of award will increase significantly. We expect NHAI should be able to do additional 3,000 kilometers in this financial year, and out of which 40% will be on BOT. We will participate in BOT, TOT, HAM in the same order of the preference. There are a list of 46 TOT projects on the website of NHAI with a total kilometer more than 2,600, which will come for the bidding in near future. Considering the debt prepayment out of the preferential allotment, our consolidated net debt to equity is reduced from 2.25:1, that is to less than 1:1 in last 2 years. We are well capitalized to tap the upcoming opportunity, which will consist of 40% of BOT along with our partner GIC affiliates. Now, moving to the maiden distribution from the private InvIT. The board of private InvIT has approved maiden distribution of 155 crores for half year ended September 2023 for FY24. This will reflect in the cash flow of IRB in Q3 of FY24. Further, large portion of the distribution is in form of capital repayment, and the same will lead tax saving for the IRB. We expect distribution from private InvIT will continue in future as well. Now, moving to the new project win, we are pleased to announce that private InvIT has emerged as preferred bidder for TOT-12 of NHAI. We have also received the letter of award from NHAI. The project was bidded through private InvIT, where IRB owns 51% and 49% by GIC. The brief detail on the project. The project is spread over 316 kilometers, stretched between Lalitpur and the Lakhnadan in Madhya Pradesh. Project marks entry in the state of Madhya Pradesh, that is 12th Indian state for the group. The project entails tolling and operation and maintenance activity on 316 kilometers stretch and revenue-linked concession of 20 years. Project includes the initial capex of 576 crores and O&M opportunity of roughly 3,300 crores to come to IRB Infra, being a project manager for IRB Infrastructure Trust. With this win, the IRB's group market share in TOT space increases. A company will make upfront payment of rupees 4,428 crores to NHAI upon achieving the financial closure. The project to be cash positive from year 1. The strong order book position provides high visibility for the construction segment and is supported by the favorable trend in the toll revenue. We have started Hyderabad ORR project from August and expect to start Samakali project soon. These projects will contribute in toll collection as well as in construction revenue. Full impact of the same will be visible from Q3 and Q4. Typically, we have observed H2 is better in terms of toll collection and construction as well. The distribution from private InvIT will add to the cash flow of IRB. These factors gives us a confidence for the healthy performance in Q3 and Q4 of this financial year. Now I will request Tushar to cover the financial highlights for Q2. Over to you, Tushar.
Yeah, thank you, sir. So I'll take you through the financial analysis for Q2 FY24 versus Q2 FY23. The total consolidated income for Q2 FY24 has increased to rupees 1,875 crores from rupees 1,439 crores, an increase by 30%. The construction revenues for Q2 FY24 have increased to rupees 1,286 crores from rupees 944 crores, an increase of 36%. The consolidated toll revenues for Q2 FY24 have increased to rupees 588 crores from rupees 494 crores, increased by 19%. EBITDA has increased to rupees 924 crores from 761 crores, an increase of 21%. Interest cost increased to rupees 435 crores as against 389 crores, increased by 12%. And depreciation has increased to rupees 233 crores from 192 crores, increased by 21%. PBT has increased to rupees 257 crores from rupees 180 crores, an increase of 43%. PAT after share from JV has increased to rupees 96 crores from rupees 85 crores, up by 12%. And cash profit has increased to rupees 404 crores as against 302 crores, an increase of 34%. Now I request moderator to open the session for question and answers.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask the question. The first question is from the line of Alok Devara from Motilal Oswal. Please go ahead.
Good evening, sir. Sir, just had a couple of questions. First, on the this project pipeline, you mentioned in your comment that BOT proportion will increase. Could you just highlight what we are looking at because till date, as in YTD, the ordering has been pretty slow. So just some indication on what we could expect in the next 2-3 months.
So our sense is that, you are very right that the bidding on EPC HAM also has been very, very slow. And from whatever insight we could get in terms of the project pipeline, almost 80,000-85,000 crores worth of projects are likely to be bid out before December. And of that, our understanding is that at least 40 to 45% of those will be on BOT basis.
Sure. And sir, this so the projects are there any projects which we have bid for on tolling basis which are already live tenders are there for this BOT toll projects which we have already bid for?
No, at the moment there is none.
Got it. Just one last question. This associate, the loss has increased on a QOQ basis. So how do we see that moving ahead in coming quarters?
Alok, if you look at the associate loss, there is a fair valuation loss of approximately 80 crores. If we adjust for the same, I think the losses were in the line of the previous quarter itself. If you adjust for the non-cash, which is fair valuation loss, and if you adjust that, the losses are in line with the previous quarter.
Got it. Just last question. So any change in the guidance on the construction, growth for this year, or we largely maintain our guidance for the execution side?
We largely maintain our guidance for this financial year, and we believe that Q3 and Q4 will be better in terms of execution. We maintain our guidance.
Sure. Thank you. That's all from my side, sir. Thank you.
Thank you, Alok.
Thank you. Participants, you may press star and one to ask the question. Ladies and gentlemen, you may press star and one to ask the question. Next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, hi sir. Thank you for taking my question. Congratulations on the
Prem, sorry, your audio is not coming clear. Can you please speak through the handset?
Give me a second. Is it better now?
Slightly.
Yeah. So thank you for taking my question, sir, and congratulations on the new TOT project. So, sir, I had 3 questions. So one was essentially when I look at this refinancing that you spoke about in your opening remarks, I think we had earlier done similar sort of exercises for Solapur, Yadashi and Yadashi Aurangabad. So when you say, I mean, we've been approved 6,400 odd crore rupees of refinancing for 5 assets, and would these Solapur, Yadashi and Yadashi would also be a part of this, or I mean, these are new 5 assets wherein you've been able to manage this refinancing?
These are the new projects, Solapur, Yadashi Aurangabad, and US project, as you rightly mentioned, we have done last time itself. This time, the 5 project includes Kaithal, Rajasthan, West Coast Tollway Limited, Kishangarh Gulapura Tollway Limited, Agra Etawah Tollway Limited, and Hapur Moradabad Limited.
Okay. Sure. Okay. So, I mean, the amortization, the benefit that we have, so essentially, I mean, you will get to have some excess cash flows now to be able to deploy. So, would that be a fair assumption that, I mean, the equity requirement that you need, or let's say, I mean, if you were to go and bid for some of these projects through private investment, and given the fact that, I mean, you've been able to push your amortization now, and there'll be some sort of free cash flow generation, that, I mean, for some of these new projects that you bid, I mean, you won't be required to kind of put in money from your pocket, and you could upstream this money from SPVs and fund a part of the growth needs that you have? Or were there some mismatches, and which is why
So principally you are right. So either you take the distribution and redeploy back as equity, or you deploy the money directly from it. But technically you are right that no new money from IRB end would be required.
Okay, sure. Okay. And so just, I mean, so when we've done this fundraising from Bricklayer and GIC and Cintra, the preferential allotment, I think you've given us a sense that, I mean, the money that you have, I mean, you'd be able to go and bid for some 20,000 crore worth of new orders. And with these 2 large TOTs, I mean, the Hyderabad ORR, wherein the equity requirement is almost around 2,800 crore, and this new TOT now, plus Samkhali and Ganga before that. So how much more would you believe and you'd be able to go and bid without any incremental fundraise or any asset monetization? I mean, how much of that 200 odd billion, I mean, you would believe, I mean, is already utilized, I mean, and then the balance is what you'd be able to bid? Unless you were to decide and churn some of these assets again.
Yes. So with respect to the existing project, including Hyderabad, equity is already funded, and the project which are ongoing, including the Samakhali and Ganga, the IRB share of equity is roughly 636 crores, and out of which 414 crores will be spent in this financial year, and roughly 222 crores will be spent in FY25. With respect to Hyderabad ORR, we have taken some additional debt and used that as a equity. We have a cash balance of around 2,300 to 2,500 crores, and that cash can be used for the funding the new equity requirement. And Hyderabad also, our equity share was roughly 1,400 crores plus only, because the balance was brought in by the financial partner GIC. And similar, as you might be knowing that this project also we have bidded through a private investment. Our equity requirement will be only 51% and 49% will be brought in by GIC. So I think that considering the large cash balance, and as distribution also started coming from the private investment, I think we can fund through internal accruals and plus the cash which we have available on books. And further, Mumbai-Pune also contributes around 500 to 600 crores of cash surplus from this financial year.
Okay. And sir, how much would be the equity requirement? Sorry, please go ahead.
Equity requirement excluding the TOT 12 is 636 crores is the IRB share. Out of that, 414 crores will be required in this financial year, and 222 crores will be required in FY25.
Well, I was asking for equity that you would need to infuse in the hybrid annuity. So there are 3 hybrids. I mean, this 636 is for Samkhyali and Ganga, right? The 3 hybrids will also need some money.
So 636 including all. The HAM project will require roughly 192 crores of equity, and balance roughly 440 odd crores will be required in the Samkhyali and Ganga.
Okay, sure. And on this distribution, the maiden distribution, I think you said, I mean, this is mostly capital reduction, right? So there won't be any tax implication till the time you've covered more than 4,000 odd crore rupees what you've invested. But how about the accounting treatment? I mean, is it fair to assume it won't reflect as a part of the P&L? It'll only be a balance sheet item wherein, I mean, you would get to have this money and this will be adjusted against the investments that you show in private equity, right? So it won't impact my P&L, I mean, to the extent it is capital reduction.
Yes, you are absolutely correct. Only interest will reflect through P&L. Capital reduction will get reduced from my investment.
Sure. And this 155, does it have any interest component, or it's only capital reduction for the time being?
Yeah, it includes around 45 crores of interest and balance towards capital repayment.
Okay, sure. Thank you. That's it from my side, sir. And all the very best for future.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Villain, individual investor. Please go ahead.
Sir, thanks for the opportunity. Sir, considering now, just continuing from the previous question where you see we will have enough cash flow for the equity part, can we take the latest quarter interest cost as the continuing number for the next 6 to 12 months, or there will be incremental debt coming in and it will still go up? And does there is any interest reset for any of our debt, and therefore also there will be some more impact on the interest cost?
So yes, on the interest front, what number you are seeing on the Q2 continues for us, because the additional borrowing will be only for the assets which are under construction, and as we discussed about the disbursement of those assets will go on till the execution goes on. So there will be slight increase on account of that part. However, on the rate part, now the reset has already been done in the SPVs like Mumbai, Pune and the Ahmedabad, Vadodara, where we will see a reset in say 2 quarters down the line. So that way we don't see any significant increase in the interest cost other than the disbursement which we will draw under the under construction asset.
Under construction, most of the assets are, just to add, most of the under construction assets are under private InvIT. That interest does not get consolidated in IRB. So with respect to IRB, whatever interest we have seen in the current quarter, probably the similar kind of interest rate, amount we should see in the coming quarter as well.
Understood, sir. So I think therefore I think next 2 quarters we should see significant improvement in the bottom line, considering the couple of more projects cash flow will start coming in. Would that be a fair understanding?
I think, as I have covered that, H2 is far better in terms of the execution, even in terms of toll collection. Probably whatever the additional collection and additional EBITDA will come from the construction after tax, that will add to the bottom line. To that extent, what you are assuming is correct.
Okay. Thanks a lot, sir. Much appreciated.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Next question is from the line of Vaibhav Shah from JM Financial. Please go ahead.
Hello? Am I audible?
Yeah, hi Vaibhav.
Yeah, hi, sir.
Yeah, you are audible.
Yeah. So why does the fair value loss arise in the trust?
So, Vaibhav, based on the Ind AS principle, if you have asset or liability which is getting matured over the period of 12 months, you have to fair value on each balance sheet date. And the amount which is there in the trust book, that is payable to IRB, and that amount is not payable within 1 year because claim amount will be crystallized once we get an arbitration award or a court order. Typically, that amount is payable after 1 year. So, on each balance sheet date, as per Ind AS principle, you have to do a fair value, and that is non-cash item for the trust.
Okay. And sir, what is the debt number on the EPC side, including the OD?
So it's around 4,700.
4,700 crores. Yeah. And sir, lastly, what is the breakup of other income?
Breakup of?
Other income for BOT and EPC?
Yeah, just around 78 crores in the construction and 30 crores roughly in the BOT.
Okay. Thanks a lot.
Okay.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question.
Nirav, I think there is no further questions. We can conclude this call.
Yes, sir. We don't have anyone in the question queue. Would you like to make any closing comments?
I would like to thank all of you for being on this call and wish to connect with you soon with the next quarterly results. Thank you and have a great evening.
Thank you very much, sir. Ladies and gentlemen, this concludes your conference today. We thank you for your participation and for using ResearchWise conferencing services. You may please disconnect your lines now. Thank you and have a great evening ahead.